As the stock market continues to be incredibly unpredictable, the price of Tesla's shares has been falling pretty quickly. Although there doesn't appear to be a clear reason for the decline, some experts have hypothesized that a repurchase of shares would be a useful strategy to raise Tesla's stock price, given the sharp declines it has been seeing over the past few weeks. Welcome back to Everything Tesla Stock, everyone. Tesla's stock fell 2.9% further recently, finishing at $216.50, while the Nasdaq and S&P 500 had declines of 1.1 and 0.7%, respectively. Approximately 25% of the automaker's shares had dropped since September 28th, right before Tesla disclosed its third-quarter delivery figures. Many people are afraid that if the stock value doesn't increase, the company's stock will likely continue to decline because it is now declining at a considerable rate. Analysts advise Tesla to increase the price of its stock by repurchasing its shares in order to avoid this. When a business buys back its shares, it usually buys the shares on the open market with cash. A thriving public company like Tesla wants to maximize shareholder value, which means it wants to raise the value of its shares and provide investors the best return possible. Repurchasing the company's shares would increase demand for them and raise the stock price as one method of doing this. What does Tesla stand to gain from a share repurchase, and will it provide a long-term fix for the falling stock price? To find out, keep watching. Before we get in, though, please remember to like, subscribe, and enable notifications if you enjoy this kind of content, so you can stay informed about all things Tesla. Due to its poor performance over the past 2 weeks, many investors are concerned that Tesla's stock may continue to fall in the weeks to come. With inflation driving up production costs and the growing prospect of a potential global recession, there have been new concerns regarding the demand for Tesla's electric vehicles. Tensions among Tesla investors have also been exacerbated by the combined outcomes of Tesla's AI Day and its delivery report. These events heralded in the worst week for the company's stock in a long time, while it is difficult to pinpoint exactly which factor contributed more to the stock's recent decline. Finally, Elon Musk, the CEO of Tesla, declared that he is still planning to acquire Twitter. Adam Jonas, an analyst at Morgan Stanley, recently lowered his base case price objective for Tesla from $383 to $350 in reaction to the stock's sharp decline. In his opinion, Tesla is probably witnessing a destruction of demand, which will be seen in shortened lead times and price reductions in the upcoming months. Is it wise for Tesla to repurchase shares in order to raise the price of its stock? To find out, keep watching. Stock buybacks can also have a significant effect on the important measures that investors use to determine a public company's worth, because they take cash out of the balance sheet of the company and may lower the number of outstanding shares. In these kinds of circumstances, some analysts think this would be a smart approach to raise Tesla's stock price. Investors in stocks such as Leo Cohen, the chairman and founder of the tsla International, have occasionally backed Tesla's plan to buy back its shares when the company's stock price has experienced notable declines. Cohen urged Tesla to declare a $15 billion stock repurchase earlier in May as the company's price was still dropping. At the time, he retweeted Tesla's Senior Director of Investor Relations, Martin Viecha, saying that the company need to make its intentions to repurchase $5 billion of stock this year and $10 billion the following year known right away. He went on to say that Tesla could finance the buyback using its free cash flow and that the action shouldn't have an impact on its current $18 billion in cash reserves. Though some investors might also think so, others disagree, such as well-known YouTuber Dave Lee. Although Lee thinks that a repurchase of Tesla's shares would be a good method to return cash or value to shareholders, he does not currently believe that this is the best course of action to increase the value of Tesla's stock. The well-known YouTuber stated that since Tesla is a capital-intensive company, it shouldn't finance a share repurchase with debt or its capital reserves. According to Lee, the corporation will have to take on more debt, which will make it more vulnerable and weaken its financial position if it needs to finance its projects or protect itself from the impacts of a downturn in the economy. Additionally, he said that the company's execution in producing goods that consumers desire and investing in new products and markets that will support the company's growth in the future are more important than concentrating on the stock price of the company, either short or long term. A corporation that wants to return money to its shareholders but doesn't need it for operations or other investments does so by buying back shares. This may sound like a smart concept, but for businesses like Tesla that are susceptible to shifting market conditions like supply, production, and delivery problems, it can be a risky move. According to Lee, Tesla does not currently have enough cash on hand to support a buyback. Without a doubt, investors may be attributing Tesla's steep decline in stock price to the company's recent occurrences, but it's possible that Tesla investors have the wrong priorities in mind. Despite the fact that Tesla's third quarter profitability fell short of analysts' projections, the carmaker offered an explanation. Tesla didn't have any problems like some other automakers, which had to cut back on car deliveries because they couldn't receive the parts and components they needed to finish production. Better yet, the company's production numbers have increased, which makes it more challenging for it to arrange the resources needed to deliver its cars to customers. Shipping costs have increased as a result of these demands on the transportation system, especially around the end-of-quarter periods when Tesla has increased its efforts to move vehicles. In a similar vein, the automaker has maximized its car-building endeavors by leveraging its expanding network. Even while this has increased Tesla's productivity, more effective logistics are still needed to make the delivery of these vehicles possible. In terms of automobile production, Tesla has also performed well. Its output numbers shot up to about 366,000, a substantial increase above some of the prior quarter's results. The 22,000 vehicles that separate Tesla's car manufacturing and delivery are mostly a timing issue, which is far simpler to fix than the production problems that the most of its competitors are dealing with. While logistical issues are not insignificant, they are also temporary. Tesla may be able to deliver the 500,000 cars it intends to by the end of the year once they start to fade. The company intends to create more than 500,000 electric vehicles in the fourth quarter of this year and sustain that production pace into next year or perhaps boost it, according to internal Tesla documents published by Reuters in an exclusive report in September. Tesla has made quite optimistic estimates for the fourth quarter. Should the automaker increase production to 500,000 units or higher in the fourth quarter, this would signify a minimum of 35% sequential growth rate for the firm. According to Reuters, the manufacturer is still planning to produce 1.6 million cars in the first 3 quarters of 2023, which would put it on pace to sell around 2.1 million electric vehicles in the entire year. At a manufacturing rate of 2.1 million vehicles annually, Tesla would surpass Audi as the largest automaker and approach BMW, which produced 2.5 million vehicles in the previous year. The automaker also just broke a monthly record for EVs built in China. Based on information from the CPCA, the company shipped 83,135 electric vehicles manufactured in China back in September. This is a record for the Shanghai facility and a 7% rise. By the end of this year, Tesla intends to maintain output at the Shanghai Gigafactory at roughly 93%. Additionally, Musk has previously informed investors that by the end of this year, he wants Tesla to produce up to 40,000 cars every week. Without a doubt, a share buyback will help Tesla in some way, but it's crucial to realize that when a business buys back its shares, it decreases the number of shares that are outstanding since the shares that were bought are either canceled or retained by the business as treasury shares. Reductions in the